Deputy Whip, Senior Minister of State, Ms. Seaman.
Mr. Deputy Speaker, may I seek your consent and the general assent of members present to move that the proceedings on the item under discussion be exempted from the provisions of Standing Order number 48.8 to remove the time limit in respect of SMS Edwin Tong's speech.
I give my consent. Does the Deputy Whip have the general assent of honourable members present to so move? Aye. Deputy Whip, please proceed.
Mr. Deputy Speaker, I beg to move that the proceedings on the item under discussion be exempted from the provisions of Standing Order number 48.8 in respect of SMS Edwin Tong's speech.
The question is moved by the Deputy Whip. As many as are of the opinion say aye. Aye. To the contrary say no. I think the ayes have it. The ayes have it. SMS Mr. Edwin Tong.
Thank you, Mr. Deputy Speaker. And I thank the various members in this House for having spoken up in support of the bill. Members from all sides of this House. I will round up this debate on behalf of Minister Gan. As Minister Gan has outlined, Singaporeans are living longer and healthier. However, many of us will face the risk of severe disability and require long-term care at some point in our lives. Therefore, it's important that we protect ourselves and our families. I'd like to assure members that even as we enhance our long-term care financing system, implement the CareShield scheme, we are and have been enhancing existing infrastructure and the ecosystem for care. We have been rolling out services to support Singaporeans in old age, and we have more than doubled in this respect the home care and day care places since 2011. We continuously look at key aspects of aging and also the related issues around successful and active aging, including, as Mr. Pereira has exhorted, the use of technology. I thank the members for the various suggestions, questions and queries in the course of this debate. I would like to use the opportunity to round up the debate and address those queries by focusing on the core principles behind the design of this financing scheme. And I will anchor the response around the key principles of inclusiveness, affordability, and sustainability. Let me start with inclusiveness. An inclusive long-term care financing system is one that supports all Singaporeans, enables them to afford essential basic long-term care. The design architecture of this scheme must be to achieve that goal, to support Singaporeans and be able to do so while keeping premiums affordable. First, in terms of coverage, the bill reinforces and strengthens inclusiveness by making CareShield Life universal for future cohorts of Singaporeans born in or after 1980. Such a design is essential to protect vulnerable groups, such as the lower income and those with a pre-existing disability. For older cohorts of Singaporeans, which are those born in 1979 or earlier, we have kept CareShield Life optional for them, as we acknowledge that the profile of this cohort, this group, is a lot more diverse. Many have previously decided to opt out from ElderShield, or may have made other long-term care financing arrangements of their own. In addition, the older cohorts would also have fewer years left, fewer economically active years left to spread out their premiums and hence face higher entry premiums. Given that the scheme remains optional for these cohorts, members of these cohorts will need to assess their own preparations, their own provisions for long-term care when deciding whether or not to join CareShield Life. To address Dr. Chiashilu's point, we will provide ample government support and incentives to encourage participation in CareShield Life. I would also like to assure Mr. Peng that those who are not severely disabled in existing cohorts can still join CareShield Life when it is launched in 2021. Mr. Peng also sought clarifications on Clause 6.4. Let me explain that. This clause is used to cater for exceptional situations, such as when someone had submitted an application for CareShield Life and it is being processed, but in the interim fell into disability before the scheme was effected or valid for this person. This clause allows the minister to use flexibility to still provide CareShield Life cover on compassionate grounds. So it is used in those limited exceptional circumstances and certainly not to be used arbitrarily. As CareShield Life remains optional for existing cohorts, we will not be able to cover those in the existing cohorts who are already severely disabled, and I think Mr. Peng understands this point. Ms. Cheryl Chan had raised this as well, and I also hope that this addresses the point, because if you cover everyone who is already severely disabled, that has an immediate impact on the premium that has to be borne by the remaining persons who subscribe onto the scheme at that stage. These individuals with pre-existing severe disabilities will be able to make claims immediately under the scheme, and so it's going to impact on the way in which you price the premium for the rest of the members, and also have an impact on whether their peers decide to join the scheme or not. This is not a sustainable long-term insurance scheme design. However, we will assist these Singaporeans with pre-existing disability in other ways, and I will elaborate on them. Professor Fatima Latif and Mr. Christopher D'Souza asked how ElderShield and ElderShield supplement coverage will be affected. As Minister Gan has explained, ElderShield policy holders who decide not to join CareShield will remain covered by their existing ElderShield policy. I would also like to clarify that ElderShield supplements will continue to be administered by the private insurers. ElderShield supplement policy holders will remain covered by their existing supplement policy, regardless of whether they upgrade to CareShield Life or not. Dr. Lee Biwa asked about encouraging existing cohorts who would not be auto-enrolled into CareShield to join CareShield Life. I would reiterate what Minister Gan has said. Individuals born between 1970 and 1979 who are ElderShield policy holders and are not severely disabled will be offered the convenience of auto-enrollment. For those born in 1969 or earlier, they will not be auto-enrolled, as their individual circumstances are far more varied, as I've explained. In particular, there is a significant number of ElderShield 300 and uninsured individuals in the older existing cohorts who will have to pay a catch-up component to join and get onto CareShield Life. They may thus prefer to have the option to choose to join CareShield Life at their instance instead of being auto-enrolled. And that's the thinking behind the scheme mechanism. Nevertheless, I agree entirely with Dr. Lee's point that it is important to outreach to these groups to help them understand, to raise awareness, and certainly we are of the view that if we design a scheme that is good and well, it is of no use if people don't understand and don't know it. So I accept Dr. Lee's point, and I also in return urge all members of this House to use opportunities that you have on the ground in your events to explain the policy, to explain the scheme design, and to reach out and explain and deal with queries that your residents may have. Ms. Irene Quay and Ms. Anthea Ong have asked about the schemes available to help younger severely disabled Singaporeans, in fact below the age of 30, including newly borns, and whether it is possible to extend CareShield Life to these people. CareShield Life is primarily designed to provide financial support for Singaporeans who become severely disabled during old age, which is when Singaporeans are most likely to need long-term care and support. Notwithstanding that, we have other schemes available. It's outside the scope of the current bill, but let me just outline some of them to help the younger severely disabled Singaporeans. First, MediShield Life will help to support their bills for inpatient and selected outpatient treatments. They can also benefit from other assistance schemes, such as the Assistive Technologies Fund and the new Home Caregiving Grant, which I think Ms. Ong mentioned, which does not have an age criterion. In addition, hospitals such as KKH and NUH offer programs such as subsidized therapy services to help patients with children who need that specialized care. Finally, government-funded safety nets such as Medifund and Comcare will also continue to provide additional assistance to needy Singaporeans. On that score, I'd like to assure Professor Fatima that overseas Singaporeans can avail themselves of CareShield Life. They will be able to file CareShield Life claims from abroad, wherever they may be, and to receive payouts to support their care costs in those chosen countries. The second aspect of inclusiveness lies in making the claims process accessible and as seamless as possible, which several members have raised queries and concerns about. Let me give members a broad sense of the measures that we will be taking or have taken. Beyond what Minister Gan has mentioned about increasing the number of accredited disability assessors to about 300, progressively expanding the type of disability assessments that can be accepted for claims, and also proactively reaching out to disabled individuals to inform them of their eligibility for claim. We will also be waiving the first assessment fee for CareShield Life claims to further reduce any hesitation or reluctance that an individual policyholder might have in making the claim. I'd like to also reassure Ms. Chan that only one assessment is required, and furthermore, the same assessment can then be made for other schemes as well, other different multiple schemes. In addition, policyholders need not pay for assessment fees for periodic disability reviews. Such periodic reviews are, however, important to ensure that we continue to make payouts only to policyholders who are and remain severely disabled. But to address Dr. Neo's concern, we will be adopting a more targeted approach for periodic disability reviews. For example, policyholders who have been assessed to be clearly permanently disabled may then be exempted from further reviews. I'd like to assure Ms. Ong that we understand and we accept your suggestion that we should indeed be assessing what an individual does instead of what the individual can do. So the focus is on the ability or inability to do something. In particular, we have been working with experts to improve the disability assessment framework to explicitly recognize the impact of cognitive impairment on the physical ability. This is in line with requests from a number of members for CareShield Life to also assist those who may have that mental condition or the cognitive impairment. So to elaborate on this, a policyholder may well be physically able to perform the various ADLs, but requires significant prompting or reminding as he is unable to remember what those steps might entail or how that is to be done. Under the current framework, assessors who may not be sure how to assess this policyholder might well classify him as not being disabled, being able to perform the ADLs, since he can physically complete them. Under the new framework and the revised training curriculum, assessors will be guided with more information, more teaching and learning, and will be more explicitly guided on the aspects that should be taken into consideration if a policyholder is suspected to be cognitively impaired, including whether the policyholder's problem-solving ability and memory impacts his or her ability to actually carry out the physical acts of the ADL. This will result in cognitively impaired policyholders being able to more consistently qualify for CareShield Life claims. Members have expressed concerns about vulnerable Singaporeans who may not be able to navigate the long-term care financing and social support landscape on their own. Again, as I said earlier, we understand this, and we want to ensure that Singaporeans know and understand the schemes well, know how to make the claims, know when it applies to them, and know what kind of claims to make. AIC, which administers all of MOH's disability schemes, and in particular the Silver Generation Office under AIC, will be our key partner in providing Singaporeans with guidance on the disability schemes they are eligible for and also how to apply. To embed more touchpoints in the community, we will create 4 more AIC CareLink touchpoints co-located at Silver Generation satellite offices, and this will be done by end 2019. At the same time, we will improve our coordination with the social service offices and other government touchpoints within the community so that our support for vulnerable Singaporeans is more cohesive and also resides more closely to where the residents and the policyholders might be. We will also continually review our various initiatives to consolidate and, as far as possible, simplify them. We encourage members to continue to refer needy individuals, and I think we heard some stories earlier, refer them to us, give us some specifics, and we'll reach out and see how we can assist. Third, we recognize that not everyone can afford or will be covered by ElderShield or CareShield Life. Members have asked for more to be done to help such seniors who need financial support for their long-term care needs. The CareShield Life and Long-Term Care Bill facilitates this by providing for cash withdrawals from MediSave for long-term care. That's a more recent advent and one which we believe strikes the right balance. The bill also sets up the Long-Term Care Support Fund, which the Minister for Finance has committed to set aside 5.1 billion to service this fund. Elder Fund, a discretionary scheme for the lower income who are severely disabled, will be supported by this Long-Term Care Support Fund. Dr. Lily Neo asked for more details for the eligibility criteria. As Minister Gan has explained, this scheme is targeted especially at Singaporeans who are unable to join CareShield Life, have low MediSave balances, and also face financial difficulties in meeting their long-term care needs. We recognize that individuals' circumstances from person to person may vary widely, and hence Elder Fund is a discretionary scheme designed to take into account different circumstances as may apply to different persons. Singaporeans who are unable to meet their long-term care needs, even after relying on other sources of financing, can be considered for Elder Fund. In response to Dr. Chia's query on how we review Elder Fund, we will review the adequacy of Elder Fund payouts over time as we have more experience, and also we look at it in conjunction with several other factors that may determine the adequacy of the payout. These new schemes and initiatives provided by this bill should, however, not be seen in isolation, but instead should be seen as complementary to the existing government subsidies and assistance schemes. I've outlined a few, such as ComCare and MediFund earlier. Our system is designed to support all Singaporeans, regardless of their income level. And so it is that to which I now turn on the question of affordability, the second key principle behind the design architecture of this scheme. Affordability involves keeping CareShield Life premiums affordably priced, whilst at the same time also providing premium assistance to those Singaporeans who need it. There are several points. First, to ensure that CareShield Life premiums remain affordable, the ElderShield Review Committee had recommended that the CareShield Life scheme focus on providing basic coverage for Singaporeans' long-term care needs. One of the recommendations was to keep the existing ElderShield claim criteria, which is the inability to perform at least 3 out of 6 activities of daily living, ADLs, a point that we had heard many members touch on earlier. Ms. Ong in particular asked if CareShield Life payouts could be tiered based on the extent of disability. We have previously considered this, and I think Ms. Ong would also know that lowering the claims criteria to 2 ADLs would immediately increase the CareShield Life premiums for a 30-year-old policyholder by about 1/3. That's anything in the order of 25% to 1/3, 33% of increment just by dropping down to 2 ADLs. The premium increase for CareShield Life would likely be significantly and also exponentially higher if the claims criteria is then further lowered to 1 ADL, given the high incidence and length of disability. So not only will there be more persons with 1 or 2 ADLs as opposed to 3, but the period of support, which is for life, will also be for longer. So both will have an impact on the amount of premium that will have to be collected. The committee had also recommended that CareShield Life payouts start at $600 per month and increase over time. Dr. Neo asked, and I think many others as well, such as Mr. Chen Shumao, if the payouts could be higher. CareShield Life payouts already start at an amount which is at present significantly higher than the current ElderShield scheme. Increasing the starting payouts from 600 to say 800 a month would also increase premiums for a 30-year-old policyholder by around 1/3. So recall I said at the start that we have to find a design architecture for this scheme that is affordable and that meets the interests of basic long-term care interests of Singaporeans. In addition, as the members would know, CareShield Life payouts are set to increase at 2% per year for the first 5 years of scheme implementation, assuming a continued increase of 2% per year after that. So that's 2% thereafter, after the 5 years. A 30-year-old joining the scheme in 2020 may receive around 1,002 per month should he become severely disabled at age 67 or later. So that's the projection that we take into account, and also to keep up with the value of money over time. So, for those reasons, we have kept the focus on basic long-term care needs and looked at other ways to provide additional support. And I urge members to remember that the payout from CareShield Life is intended and it is designed to be complementary. It complements the other pillars of financing support, not replace and not take over, and also not put in place and reduce others. It's to complement as an add-on. Lower and middle-income Singaporeans, including those with moderate disabilities, will be supported with subsidies of up to 80% for residential and non-residential care services, and can also receive other disability grants. For example, the existing Pioneer Disability Assistance Scheme and the new Home Caregiving Grant, which will be launched at the end of this year, will provide support for persons with moderate disability. So the threshold will be different from what is otherwise required in the CareShield Life scheme. In response to Dr. Neo's query on the disability criterion and assessment process for the Home Caregiving Grant, I should explain that the Home Caregiving Grant is targeted at precisely that, the moderately disabled Singaporeans who require some assistance with at least 3 ADLs. This is less stringent than the severe disability claims criteria for CareShield Life and the current ElderShield Life, where a higher level of dependence is required for each ADL. Dr. Chia and others in this House asked about the type of supplements that will be offered by private insurers and whether Medisave can be used to purchase the supplements. Singaporeans can purchase supplements from the private insurers, which currently provide coverage starting from 2 ADLs and also a higher payout. So you can choose either one or both of these supplements. As with ElderShield supplements, Singaporeans can use up to $600 of their Medisave annually per insured person to pay for CareShield Life supplement premiums. Dr. Neo asked if the government could administer these supplements. As I explained earlier, our approach for the government in this scheme is to provide basic coverage, whilst at the same time allowing the private sector to innovate in the provision of supplementary coverage. We believe that there are benefits to be reaped, for instance, in the diversity and type of products that are being offered by allowing private insurers to compete in this space beyond the basic tier. Second, in response to Professor Fatima's query, we keep premiums affordable by starting earlier. So that's one principle behind why 30 and not 40, which is ElderShield. A 30-year-old would have been working for some years at that age, and starting premium payment at that stage lengthens the payment duration and also reduces the annual premium payable, making CareShield Life premiums more affordable and more within reach, including for a person who has started work for some time at around 30. Third, we allow the use of Medisave for CareShield Life premiums similar to the approach for MediShield Life and ElderShield today. In response to Professor Walter Teixeira's point, we allow the use of Medisave, but judiciously, because we recognize that it may be difficult for individuals to save and plan ahead for long-term care. We facilitate them starting these preparations early by allowing individuals to tap on their existing savings in Medisave as another financing source, instead of requiring them to use only cash, which, as the member knows, will cause a strain in the cash flow. This also helps to buffer individuals against the vagaries of life, sometimes from unintended or temporary unemployment. As a safeguard, we only allow Medisave to pay fully for basic health care and long-term care insurance. For additional coverage, we have set withdrawal limits to protect Medisave adequacy. And I think that is in line with the discipline that Professor Teixeira spoke about in the way in which we use Medisave to fund these schemes. Mr. Peng also asked whether permitting Medisave users for CareShield Life premiums would affect adequacy. The current Medisave contribution rates allow most working households in future cohorts and auto-enroll existing cohorts to pay for CareShield Life, MediShield Life premiums, and other healthcare needs from their monthly Medisave contributions. Fourth, I would like to assure members that the government is committed to keeping the premiums affordable through the provision of subsidies. This includes permanent premium subsidies for lower and middle income policyholders. Ms. Jessica Tan, Ms. Cheryl Chan and Dr. Chia Shi Lu asked some questions about this. In addition, we will also provide incentives to encourage existing cohorts to join the scheme, and these incentives are netted off against the premiums. Younger cohorts will also receive transitional subsidies. On Mr. Pereira's point, I'd like to clarify Clause 15 of the bill that allows the offsetting of premium subsidies from premium refunds for administrative ease. So let me just illustrate it with a scenario. For example, if an auto-enrolled policyholder decides to opt out before the deadline of end 2023, which Minister Gan outlined, the premiums he had paid will be fully refunded, and the mechanism that is being used is designed in Clause 15. Any premium subsidies and incentives he received previously will then, of course, also be offset from this refund. So you don't retain the subsidies whilst at the same time choosing to exit from the scheme. Separately, if the Council considers at its regular adjustments to consider premium rebates, for instance, in that situation, if there's a premium rebate to be paid to a policyholder, the rebate computation will not take into account the subsidy that has been given. So if part of what you've been paying as a premium is assisted through the subsidy, then the rebates that are given will not take that into account in giving the rebate to the policyholder. Instead, the rebate will be retained in the fund for the benefit of all the other policyholders, and that, we believe, is the fairest arrangement. Mr. Peng also asked if the savings from government administration has already been reflected in the CareShield Life premiums. Let me confirm that the CareShield Life premiums for existing cohorts are based on the expected expenses under government administration, and would thus have also reflected the savings that we expect to see from such administration. In any case, any further savings there might be will be fully returned to policyholders, such as in the form of higher payouts or the premium adjustments that I just spoke about. In short, the fund is not for profit, and should there be any surpluses, it will be put back into the fund for the benefit of all policyholders. Next, I'd like to assure members that no one will lose coverage due to his or her inability to pay. But it has to be a genuine inability to pay, not just a refusal. The government will provide additional premium support to Singaporeans who cannot afford CareShield Life premiums, even after premium subsidies, MediSave, and family support. Dr. Chia had a question about additional premium support criteria for both CareShield Life and MediShield Life, and whether we intend for it to be the same. An individual's additional premium support status will be shared across both CareShield Life and MediShield Life, so that the individual would not be put through the task of having to apply for additional premium support twice over. Let me turn now to the third key principle, which is that of sustainability. I think members here would agree that we must ensure that the long-term care financing system that we put in place must remain sustainable and must work in the long term. This is so that our children and the generations beyond that will not be unnecessarily and unduly burdened by the needs of the current generation. Let me elaborate with reference to a few points. First, CareShield Life and ElderShield are designed to be self-sustaining schemes. So that, again, is in the policy design. It's in fact hardwired into the way we design the schemes. So as a result, these schemes are heavily pre-funded, with CareShield Life premiums payable until age 67 or spread over 10 years for older existing cohorts, and ElderShield premiums payable until age 65. This means that each cohort saves up for their own long-term care needs and taps on these savings in their senior years, thereby minimizing intergenerational transfers across cohorts. CareShield Life and ElderShield premiums are set based on this pre-funding principle, and also in line with internationally accepted industry standards and principles. Several members, Ms. Ong, Ms. Irene Quay, Ms. Tin Pei Ling, have asked about gender-differentiated premiums. In particular, I think Ms. Quay expressed concern that the gender-differentiated premiums could start the trend of potentially differentiating premiums in future by reference to other factors, such as race and so on. We have explained this previously, the actuarial basis for this feature, but I do recognize that there are other factors at play. So let me just quickly recap it and address the points raised by members. Actuarially, it is recognized that women live longer and more likely to experience severe disability and live longer in severe disability. Let me just outline this with reference to some statistics and numbers using Singaporean-based profile and information. In 2017, the average life expectancy at birth for women is 85.2 years, as compared to 80.7 years for men. As individuals are more likely to become severely disabled in old age, women have a higher probability of becoming severely disabled in their lifetime. 3 in 5 healthy women at age 65 are expected to become severely disabled, compared to 2 in 5 healthy men at age 65. In addition, when disability happens, women are also likely to remain in disability for a longer period of time than men. Women aged 60 are expected to spend 7.8 years requiring assistance with any of the ADLs, compared to 2.6 years for men. So it's 7.8 for women and 2.6 for men. And those are based on a study done in Singapore of Singaporean numbers. This means that women stand to receive more benefits from CareShield Life, if you look at it across the spectrum. And hence, their actuarially priced premiums are higher. We could average out the premiums across genders. I think some members have alluded to that. But this really only works if it was a fully universal scheme, where there is no option. As CareShield Life, however, it is optional for existing cohorts. Gender-neutral premiums could well encourage male policyholders to stay on ElderShield and buy gender-differentiated premiums from the private insurers, which may now then appear cheaper. And as members know, the ElderShield premiums is gender-differentiated. Conversely, female policyholders would now find CareShield Life a much better deal than the existing gender-differentiated ElderShield. This increases the risk of gender skewing in the risk pool, as more women than men would join the CareShield Life scheme. The gender-neutral premiums would become increasingly unsustainable, and premiums would have to increase, and possibly approaching the level women would have had to pay anyway under a gender-differentiated scheme, but without covering a significant portion of men. In response specifically to Ms. Kueh's query, I should explain that actuarial differences in claims experienced by gender is well established both locally as well as globally. However, there is limited data to support such differences based on other factors, such as race or other genetic factors, which is why we look at this as an actuarial factor. So does ElderShield, and ElderShield is supported by a series of other private insurers. In addition, I would like to also note that ElderShield supplement premiums are not differentiated by race or genetic factors, the same factors that Ms. Kueh has outlined. And my ministry will not allow the insurers to do so. Hence, the concerns I just explained with regard to gender would not apply. And there is no impetus for us to differentiate CareShield Life premiums using these factors. Nonetheless, members have raised fair concerns about affordability for women, and I think those are fair points, and the need for greater inclusiveness for a national scheme. But let me explain it this way. If you've seen the numbers that I've outlined, I would suggest that greater inclusivity also means ensuring that the scheme integrity, the actuarial integrity of the scheme in itself should be the proper basis for designing the scheme terms. And that, in the long term, enables a fair, long-term sustainable outcome. We will, however, address affordability separately, including the points raised by members, through the provision of means-tested premium subsidies and also additional premium support. The means-tested premium subsidies are intentionally designed to be based on a percentage of premiums, so that lower and middle-income women will receive larger dollar quantum. So in absolute dollar terms, it will be a larger quantum of government subsidies when compared to men in the same cohort at the same income levels. I would also suggest to members in this House that a gender-neutral premium or gender-neutral scheme design might at first blush appear inclusive. But if you take into account the factors that I've outlined, looking at that in terms of the payouts and the expected payouts, and for the period of those payouts, then in the longer term, it would likely lead to women from existing cohorts opting into CareShield Life and men choosing to stay away. We would then have a gender-skewed coverage, and this would have the unintended effect of further worsening national solidarity over the scheme in the longer term. Dr. Chia, Mr. Peng Eng Huat, and Mr. Leon Pereira, amongst others, asked what information about the administration of CareShield Life, the management of the insurance fund, and the premium pricing methodology, what information will be available. Let me assure members that the scheme will be transparent. Minister has explained earlier, the accounts of CareShield Life and ElderShield Insurance Fund will be made public. We will also publish relevant information on the premiums collected and payouts made for CareShield Life and the ElderShield Insurance Fund on an annual basis. The public can be assured that the information shared will be similar to that for MediShield Life, and the CareShield Life Council will also consider what other information might be useful, having regard to industry norms. As we have explained in Parliament last year, July last year when we debated the white paper, premium pricing is an extremely complex exercise, and in coming up with the scheme design, MOH has engaged professional actuarial consultants to construct an actuarial model to do so. So, for example, underlying assumptions include mortality and morbidity assumptions and how these change over time and over age for the population. Given these complexities, instead of just publishing a large number of actuarial tables, it is far more important and a lot more meaningful to release relevant information in a manner that can be easily understood and reviewed by a layperson. On Mr. Peng's query, I think Mr. Peng had a query on the US numbers. I think you got the 52% numbers. The query, I think, centered on the statistic that in the US, 52% of elderly would require long-term care assistance and asked whether this was taken into account. This, along with information coming out from the UK and Japan, was not taken into account in computing the premium in this case. On the assumptions backing the 1 in 2 that was shared previously, and I think that's the point that Mr. Peng also raised, MOH has engaged professional advice of actuaries to compute this estimate using the assumptions and the parameters and the model that I spoke about earlier. The projections are based on ElderShield claims experience, but also draw information from a wider range of cross-sectional and longitudinal sources, given the limited experiences at older ages. As shared previously, the actuarial pricing data we looked at includes insurance schemes in the US, Taiwan, and South Korea. It doesn't mean we use their data wholesale. It looks at the models that they have there, looks at our information, our claims experience with ElderShield, draw them together, use the models, and get the experience and expertise of the actuarials, and provide the scheme design. At the end of the day, I should emphasize that if the actual claims experience was better than expected, in other words, to take Mr. Peng's point, if we were more conservative in designing the scheme, the premiums are collected are more than what's needed, then any surpluses, as I explained earlier, from any of these excess premiums will be fully returned to policyholders for their benefit. The Council could recommend for the surpluses to be returned in a number of ways, such as higher payouts over the years, reduced premium increases over the years, or premium rebates. We intend to give Council the flexibility to study factors and to make recommendations so that they adequately respond to changing circumstances and the needs on the ground. I should also outline that there is a publication by the Singapore Actuarial Society that's now available publicly. It provides a broad explanation of the key pricing assumptions and risk for long-term care insurance. What are the challenges for pricing long-term care insurance, the concept, the thinking behind the models, and also the advantages of pre-funding for long-term care insurance. If members are interested, this technical paper was recently released by the Singapore Actuarial Society. Mr. D'Souza asked about intergenerational equity, given that monies for both CareShield Life and the ElderShield scheme will be placed in the same insurance fund. Let me assure the members that monies for the schemes are placed in a common insurance fund for capital and administrative efficiency. For example, government capital injections into the insurance fund, which are meant to support tail-end risk, can benefit the capital needs of both schemes. However, monies maintained for CareShield Life and ElderShield will be tracked and accounted for separately. I would like to emphasize that monies collected for one scheme will not be used to fund the other scheme. Secondly, we will establish the CareShield Life Council as a key safeguard over scheme sustainability in the long term. CareShield Life Council will be independent and will review and make recommendations for both CareShield Life and ElderShield schemes. As Minister Gan explained earlier, one key role of the Council will be to make recommendations to the Ministry on the adjustments to CareShield Life premiums and payouts to ensure sustainability. In answer to Dr. Chia's question on how often payouts and premiums will be reviewed, let me assure Dr. Chia that the Council will monitor the disability trends and claims experience closely and on a regular basis. Let them decide how regular they feel they need to, and it's possible that the review regularity may be more in the earlier years as we start the administration of the scheme. We will then determine the exact cycle for the adjustments thereafter in consultation with the Council. To enable the Council to perform its functions, the Council will comprise individuals with different diverse backgrounds, ranging from healthcare practitioners, medical social workers, auditors, investment professionals, union members, and also an actuary who is a fellow of the Singapore Actuarial Society, as Ms. Quay has suggested. The Council will also be supported by independent external actuarial consultants. Third, again similar to MediShield Life, the bill also includes provisions for premium payment enforcement to enable us to take action against willful CareShield Life premium defaulters. The principle behind this is clear. We have to be fair to all policyholders, and individuals do need to play their part by keeping up with and paying the CareShield Life premiums. Enforcement provisions are therefore necessary to ensure that willful defaulters pay their premiums instead of having their premiums unduly borne by other policyholders. Fourth, and Mr. D'Souza raised this point, we intend to take a strong hand against fraudulent assessments and misuse of payouts. The bill provides that maximum fines and penalties for the offences of fraudulent assessment and misuse of payouts will be twice the maximum fine and penalty for the offence of false declaration. This is commensurate with the more severe nature of these offences, and also having regard to the fact that a nominated payee is acting on behalf of someone who is disabled. To Dr. Chia's query on how we can further guard against fraudulent claims, let me assure members that regular audits will be conducted. No audit will be 100% foolproof, but audits will be done, patterns will be studied to sieve out potential fraudulent claims. So, for instance, we might look at cases where a claimant was assessed to be severely disabled and then subsequently assessed not to be disabled at all within a short period of time. These markers will allow my ministry to look into further cases and investigate them. To Ms. Chan's query on whether we will audit nursing homes or service providers who have access to patients' payouts, let me first clarify that these providers generally only have access to the payouts if the policyholder or the caregiver had nominated these providers to receive the payouts on their behalf. Where the policyholder lacks the mental capacity to do so and is destitute, the nursing home can act on his behalf to apply for payouts, but this will only be done in very exceptional circumstances. Let me assure Ms. Chan that we will audit providers who receive these payouts to ensure that they are using the payouts in the interest of the policyholder and towards the policyholder's care. We would like to make clear that the audit and enforcement framework is not intended to penalize bona fide assessors or caregivers. Sometimes genuine bona fide mistakes are made, and sometimes, to answer Mr. D'Souza, what might be a reasonable position, one could consider a situation where a caregiver living with a policyholder who uses part of the benefits for the household expenses of the policyholder's family when the policyholder's needs are already taken care of. So in other words, part of the same household, needs are already taken care of, and the funds which are fungible are applied for another reason when the basic needs of the policyholder is already taken care of. So those situations, we do not intend to penalize the caregiver. To Mr. D'Souza's other query, it is indeed our intent to return payouts to policyholders in the event of misuse. So the fines and penalty structure meted out under Clause 50, subsection 2 of the bill is to be paid to the consolidated fund. The fines go into the consol fund. However, Clause 50, subsection 3 provides for the courts to order the errant payee to refund payouts he or she has received into the CareShield Life and ElderShield Insurance Fund. So those wrongfully received payouts will be put back into the fund for the administrators to consider giving to the proper payee. These monies can then be paid to that person or to a nominated payee at the directions of the policyholder or the policyholder's caregiver. Like Ms. Joan Pereira and Dr. Chia, we do take a serious view on data confidentiality, and the safeguards in the bill reflects this, as Minister Gan has elaborated upon earlier. Members who are concerned about the security of CareShield Life IT system, we will design and build the system to stringent standards. For example, by restricting system access to only approved users, encrypting data sent across organizations, and also a monitoring and tracking system activity. Fifth, we must ensure that Medisave monies remain adequate to meet an individual's healthcare needs in old age. We all want to do a lot. We all want more payouts. We all want less premium, and we want there to be lower ADLs. That, I think, is the summary of the debate that we had today. But remember what I said at the outset. It must be designed for a broad majority of Singaporeans and kept affordable. And I think that has got to be the design intent. And I'd like to also borrow Professor Teixeira's point, so eloquently put, that we do have to use these schemes judiciously. We have to have an internal discipline to what can or cannot be used out of the Medisave. Members have raised several queries on the withdrawals from Medisave for long-term care. So let me address this. And some have also asked for the criteria to be relaxed so that we can extend the withdrawals to that of severely disabled children, parents, or siblings. And yet others in this House have expressed concerns over the sufficiency of Medisave given the increased flexibility. It is important to remember that Medisave's primary purpose is to help Singaporeans save up during their working years for their healthcare needs in the older age. As a general broad proposition, I think that would find no quarrel. Expansions or increases in Medisave usage will obviously impact adequacy for other healthcare needs, and they have to be considered carefully, as Professor Teixeira has outlined. As a first step, MOH has extended Medisave cash withdrawals to the severely disabled in view of the fact that their care needs are typically higher, more intensive and higher. As we recognize that the amount withdrawn can be significant depending on the length of the disability, we have started by proceeding cautiously, by limiting the use of Medisave withdrawals for long-term care to the member or to the member's spouse only. This ensures that the Medisave adequacy of the severely disabled members' children and their ability to afford current and future healthcare expenses are not impacted. So that's also a cross-generational issue that I think Mr. D'Souza alluded to earlier. Singaporeans who are in financial need and have low Medisave balances may apply for other government schemes, such as Elder Fund, to obtain additional support for their long-term care costs. Mr. D'Souza, I think, asked about 5,000. Why 5,000 as a floor for Medisave withdrawal? It's been set to ensure that Singaporeans have some savings to help pay for their other healthcare bills, whilst at the same time allowing immediate access to Medisave for long-term care needs. It's really about striking the right balance between the two competing interests. Second, as we have planned ahead with the Minister for Finance setting aside the monies for the long-term care support fund in advance. Let me just respond to Dr. Neo's and Professor Fatima's question on how long the monies in the long-term care support fund is designed to last for. I would like to explain that the majority of the monies in this support fund will be directed to the existing cohorts as they are older and they are expected to form the majority of CareShield Life policyholders at the start. The majority of elder fund beneficiaries are also expected to be in these cohorts given the higher prevalence of disability in old age. This support fund is thus sized to be more than adequate for these cohorts as they age into their silver years. So those are the parameters, and this is the cohort that we intend to look after with this fund. Nonetheless, as we progress and there's more information and more claims experience, we will review the adequacy of the long-term care support fund on a regular basis. Sir, I've covered the three key principles undergirding the design of our long-term care financing system and the various safeguards and supporting provisions in this bill. All three principles are essential for us to deliver a financing support system that can benefit all Singaporeans regardless of income levels or disability status for generations and, we hope, generations to come. Let me turn now to the last topic on communication and outreach efforts. Members have asked about our communication and engagement efforts on the new schemes, our efforts to explain the importance of planning ahead for long-term care. Since May 2018, we have in fact been busy engaging the public on these enhancements to our long-term care financing system. The Ministry has held over 60 public briefings and engagement sessions to date and will continue to do more and will continue to spread information on this and educate the public, explain queries and help them with designing their own, looking at their own landscape and deciding whether or not CareShield is suitable for them. This is on top of the numerous briefings which I'm sure all of us in this House would have diligently done at our grassroots events over the weekends and so on. And I ask, as I did earlier, that this continue. As Minister has mentioned earlier, CareShield Life will be launched around mid-2020 for Singaporeans born in or after 1980. Given that these cohorts are younger, our engagement efforts for them will also have to be tailored to media platforms that are typically used by that generation of people, so social media, for instance. We aim to progressively launch CareShield Life for existing cohorts born in 1979 or earlier from mid-2021, and we'll commence engagement efforts for these cohorts closer to the launch in 2021. Other than mass outreach in this fashion, the Silver Generation Ambassadors will also conduct face-to-face engagement with older Singaporeans in the existing cohorts. And I hope this assures members that the Ministry's efforts to ensure that Singaporeans from the existing cohorts are aware of the scheme's benefits and will be able to make a considered decision whether or not to join CareShield Life. Of course, in all our engagement efforts, we will not just be explaining the features of CareShield Life. As Ms. Tin pointed out, we will need to address the why, and that, I think, is equally important. We have to explain why this is useful, why planning for long-term care is important. We also need to set out holistically how the different pillars of long-term care financing support work together, so that people, just as members in this House have, will have a holistic view of the different schemes and different support structures that exist in this space. We should also explain how different types of basic insurance schemes, such as MediShield Life, the Dependents Protection Scheme, and CPF Life, they all serve a different aim and purpose, and perhaps a different constituency of people, but they're all complementary in this landscape. Finally, Mr. Deputy Speaker, let me conclude. As Singaporeans live longer, our healthcare system has to evolve to better serve the needs of Singaporeans. We have put in place measures to help Singaporeans remain healthy for as long as possible. And on that, I thank Dr. Lee for so warmly embracing HPB's efforts. They will continue to do so. And we do believe that going upstream to ensure that we keep the healthy well or well for as long as possible should be the next bound. At the same time, we will continue to invest in infrastructure and the services, as I outlined at the start of my speech, to support those who fall into disability. At the same time, we have built up our long-term care financing ecosystem with the introduction of various new schemes based on the key principles of inclusiveness, affordability, and sustainability. The CareShield Life and Long-Term Care Bill contributes to that effort, strengthens the landscape in that space, and enables the key pillars of this financing framework to be put together. As we continue to build on these efforts, I would like to urge the members of this House to give your support to the CareShield Life and Long-Term Care Bill. Mr. Deputy Speaker, on that, I beg to move.
Ms. Entiao,
Thank you, Mr. Deputy Speaker.
you are raising a clarification, right? Because this is for clarifications only.
Sorry?
This is for
No, I'm
clarifications
not going to
only.
make a long speech, don't worry. Thank you for the reminder. Thank you, SMS Edwin Tong, for your response. I appreciate that. That was very, very comprehensive. Can I just ask a very simple question regarding the gender differentiated premium? You mentioned earlier that the concern is that if we do it as gender neutral premiums, then we're going to be worried about men not wanting to come on the scheme. And I'm finding it a bit of a struggle to understand how do we know that would be the case. And maybe we should do a deep test here. But I just find that hard to sort of understand. Could you please clarify that?
If you follow the numbers that are outlined earlier, and that's one set of numbers, and there are others that support this proposition as well, then you will know that women generally, I don't want to say specifically, but generally will live longer life expectancy. They fall into disability and require support for a longer period of time. So if you look at the scheme design, you will fall into serious, severe disability. You make the qualification and the payouts are then given. For a typical woman, that payout will last for a longer period of time. And so the assets of the fund, the common fund, will be depleted more quickly as regards a woman than it is for a man. Over time, that will have a bearing on the premium that will be payable. And when that happens, if you pay the premium in equal proportions between a man and a woman, and the men deplete the resources in the pool at a lower or slower rate than the women, then you can see that there will be a differentiation. And over time, that differentiation will result in the men effectively paying for part of what the women enjoys in the context of this scheme. Which is why we made the point earlier, and I think in the previous debate last year, Minister Gan also made the point, that we try as far as possible to keep the scheme design and the terms of the scheme actually consistent. We look at what insurers typically do, calculate it on the same basis, but at the same time, outside of the scheme, we look at ways and means to assist. And it's not just for the gender differentiated premium. We assist also those at a lower income. It's not built into the scheme terms because that's not part of the actuarial calculations. But at the same time, we use that, which makes the scheme actually, the integrity of the scheme actually correct, but at the same time using additional mechanisms, support mechanisms, to support those and help those who may not be able to afford it. So I hope that answers your question, but you may want to look at the paper that I can share with you that looks at this and looks at how this impact, what impact this has on the way in which premiums are calculated.
Associate Professor Walter Tessera.
Mr. Deputy Speaker, thank you. I thank the SMS for the really wonderful wrap-up speech. But while I agree with him that adverse selection is going to be a problem if you have gender-neutral premiums in the private market, I wonder what are his views on whether this would be an issue in the mandatory component of CareShield Life, because with the mandatory component, the ministry is in fact free to have gender-neutral premiums without incurring any sort of adverse selection there. And there, I think the issue really is, although I generally believe prices must be right, there's an element of equity here, and obviously many learned members believe that it's important for there to be some kind of cost sharing between the genders here. So, equity also is a consideration besides just prices being right here.
May I request that both clarifications and answers be kept short? We still have 2 more bills after this.
The member's point concerns the impact that a universal scheme might have. If the scheme was universal, there might well be different considerations. But this scheme, the way it's designed, as the member will know, is not universal. There's an option, especially for the existing cohorts. And that's where the differentiation will result in there being an imbalance.
Ms. Jessica Tan.
Yes, thank you for the roundup. I would just like to ask some clarifications about a question I asked earlier, which is that if someone doesn't qualify because of the 3 ADLs, but really with two ADLs, or maybe even one, is somewhat unable to continue to work and earn an income and therefore has difficulties paying for the premium, is he or she still expected to continue to pay premiums in those kind of situations? The second area and Mr. Deputy Speaker, please indulge me on this. I did not want to speak about the gender aspect because I had read the report. But after hearing your roundup speech, I have to ask some questions. Because just as it's an actuarial view of the risk factors, it is also a lens that we all put on to look at which risk factor or which differentiated factor we looked at. And last night when I read the report again on the burden of disease, I actually looked at it from a gender differentiation lens. And therefore I came to the same conclusion that actuarially it is a fair system to have that differentiation. But having heard this and hearing the point about the fact that this is a partial universal system and all that, if we took from an actual standpoint another factor, that is the risk factors affecting the disease burden or the disability, and I go back
Ms. Tan, don't make advocacy for that point.
Yeah. Okay, sorry. On the point about the factors that affect Singapore in 2017, in terms of affecting health in Singapore, it's really dietary risks, tobacco, high blood pressure, and high blood sugar. A lot of this is lifestyle and also genetic factors, which is, in a sense, if we took that view and we did the same actual, put the same actual lens on it, then we would come to a different conclusion on the differentiation to be used for premium. I'll leave it at that point. So I'll ask you if, with better experience, can we, at some point in time, with the experience of CareShield Life, as you've said it many times in your speech, can we re-look with that data and the experience and the trends to see if then premiums could be adjusted at that point in time with better knowledge and intelligence from the data, and be able to do that?
I think the short answer to the second question is certainly yes. With more claims history, with the progress of the scheme, and with the more information and obviously more studies done, those all will be taken into account as adjustments are made, and maybe even the design architecture of future schemes considered. But for now, I think the member will remember that I cited a paper which says that women, the period of time that women is living in disability is I forget my numbers, but it's about 3 times, 2.6 and 7.8, I think it was. And I think that is the number that actuaries use to look at the calculations. On the first point, if one is not at severely disabled stage, then yes, the premiums do continue until the 3 ADLs is hit. But if the policyholder is unable to support it, then you've heard from Minister and myself the whole series of support mechanisms that will kick in to ensure that this person will not suffer a dropout from the policy only because he's unable to pay his premium. And particularly, as this member has mentioned, Ms. Tan has mentioned, if it arises from the 1 or 2 ADLs and he's lost his job, then I think a case can be made for support to be given to this policyholder.
Mr. Pritam Singh, clarifications, no more advocacy, please.
Just a quick question. Earlier on, there was a comparison about how high premiums could rise if we drop the qualifying criteria from 3 ADLs to 2 ADLs. That would be 1/3. Premiums go up by 1/3. Is there a similar calculation the ministry has done if indeed there were gender-neutral premiums? How much more would men have to pay?
We have not done this calculation simply because when we looked at it and the scheme was designed with the actuaries, that was a component that was put in, and this was the recommendation from the actuaries. And when you look at the way in which the current ElderShield policies are designed as well, that's no different. I will make one other point, that when we look at the... your earlier point was on the way in which we designed the scheme? Just that, okay.
Mr. Yee Chia Sing, last clarification.
Thank you. I'd like to ask about additional support for those families that are struggling with currently the seniors that are already, they need to hire a helper or put in nursing home. For Medifund, currently the trigger is that the families cannot pay their hospital bills, so the medical social worker will be triggered. But for these families, because they put in nursing home or they need to hire a helper, what is the trigger point that the agencies will need, that this will know that this family actually need additional help? Thanks.
Well, that's a broad question, and I would say that we have a broad number of options available. When you say trigger point, I'm not sure I follow, but obviously when family is in a need for assistance, there are a whole series of schemes, and I don't want to repeat it, but I've outlined them, ministers outlined them. Those can be invoked. And I think you mentioned a helper. The home care giving grant actually does do that as well, serve that need as well. And the criteria there is, of course, also, as I mentioned earlier, lower, the threshold is lower than the current CareShield Life ADL criteria. So I hope that addresses at least a part of your question. If there's a specific point that the member wishes to follow up on, I'm happy to do so offline.
The question is that the bill be now read a second time. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it.
CareShield Life and Long-Term Care Bill.
SMS committee stage what day? Minister.
Now, sir, I beg to move that Parliament will immediately resolve itself into committee on the bill.
The question is that Parliament will immediately resolve itself into a committee on the bill. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it. The question is that clauses 1 to 68 stand part of the bill. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it. The first to third schedules. The question is that the first to third schedules stand part of the bill. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it. Bill to be reported. Minister for Health.
Mr. Speaker, I beg to report that the bill has been considered in committee and agreed to without amendment.
Third reading what day?
Now, sir, I beg to move that the bill be now read a third time.
The question is that the bill be now read a third time. As many as have the opinion say aye. Aye. To the contrary say no. I think the ayes have it. The ayes have it.
CareShield Life and Long-Term Care Bill.